Hey guys, RC Peck here with Fearless Wealth Training. And one of the things that I often train people to do is get to price charts and have price charts tell them what to think, right? Because your portfolio only goes higher if what you own is going higher in price. So price is one of those things, whether you agree that it should be going higher or not, that if you want your account to get bigger, you need to be in things with the price going higher. So I want to keep this super simple, and I want to look at the 11 sectors that make up the S&P 500, and I categorize them into 3 different types of formations, and let's go through each one of them. We can do it really quickly, and just let us listen and see what these sectors are telling us is going on, and not the news or information or your Facebook feed or Twitter or anything like that. But let's look at what actually matters, right? Who's voting on the market going higher? And the answer is these 11 sectors. Now, there's so many different ways we can slice and cut and segment and splice the market, right? We can look at value, which is not one of the segments. We could look at growth. Those are called factors. But really just comes down to different ways that we're slicing. So let's look at these 11 sectors and let's hear what they're saying. So I'm going to start with industrials. Let me pop over and actually get this. So if you look here on the screen, okay, that's industrials. So that's a new lifetime high. Now I'm recording this on Wednesday, Veterans Day, 11/11. But that's a new lifetime high on industrials. So again, a new lifetime high is a sign of stability and strength. Next, I go to materials, the material sector. That's a new lifetime high. Okay. Then I go to healthcare. So this is our 3rd sector out of 11. That's at a new lifetime high. Then I go to consumer staples, and that's at a new lifetime high. So far we have 4 of the 11 sectors that are at new lifetime highs. This is hundreds of millions of people voting that, like, we don't have to guess if the market is going higher. The market is going higher. And I will pull back and we can look at an index after this. Okay, then I want to go to the next grouping, which represents 3. So this is consumer discretionary right here. Though it's not at a new lifetime high, it is just a hair's breadth away from breaking out to a new lifetime high, guys. When I'm talking to you on this video today, I'm looking over here at the most recent 2 or 3 months of all these sectors. And this is just in a digestion sideways pattern. This is consumer discretionary. And that is just a tinch below new lifetime high. So that's consumer discretionary. This is communications, same thing. It is digesting, but it's above. The other thing is, just notice how these are all above the February high at the beginning of the year. So anything above that is just it's in the hands of the strong. It's in the hands of the bulls. So here is communication. And we've got, of course, then we have tech. And that's way above its February high this year. And again, what it's doing is it's going sideways. That's it. It's going sideways. The one thing I will say that people often get wrong is people are so quick to say the leader is done leading. Like, nope, U.S. is done. Emerging markets is taken over, or tech is done. Now it's going to be staples. And first of all, that's okay if that happens. But it's kind of like when people count out Americans, like you never like bet against the American consumer. Like never bet against the American experiment. Like we'll figure it out, guys, right? Because we have more of what's right. And with all that's right, we can always fix with what is not working. That didn't come out as clean as I wanted it to. Okay, and then we have the last sector type of group, which is just horrible looking. So this is energy. Now, look, it's actually still going up since on Saturday when the presidential election had I'm just going to call it a clear winner. I understand that might really freak some people out if they don't want it to have a clear winner. Here's financials, still kind of lost in the woods. Let's call energy lost in the woods. Here's real estate. Real estate is still lost in the woods. I'm calling lost in the woods because here, guys, is the February high of this year, and they're way below it. So I'm kind of grouping these 11 sectors into three things. New lifetime highs, and we had 4 of them. Then I have way above the February high, and just consolidating, there's 3 of them. And now we're in the lost in the woods group. And then the last one is utilities, which is doing its best to get back up there above its February high. So we have 11 sectors. They are all moving up. Some are moving up much better. We have 4 at lifetime highs. We have 3 that are digesting gigantic moves and moving higher. And then, of course, we have just the S&P 500 with dividends reinvested as measured by the SPDR's S&P 500 ETF. And it's, again, I'm doing this on Wednesday, and it's a little ink. It's inked out a new lifetime high. But, we can pop over and look at the all-world ex-US. So this is the rest of the world minus the US. And if you just notice, that's at a new lifetime high. So you have the rest of the world collectively saying, yeah, let's go for it. EEM is right here, still not at new lifetime highs, definitely breaking up, right? It is definitely breaking up. You can see it's really broken above this resistance, but you can see here is its old high right there that it still needs to break above. So price is moving higher. The price of bonds are moving lower. That's going to really affect a lot of older investors, right? A lot of older investors were taught that bonds are the answer once you retire, or bonds are the answer once you turn 60, or searching for income, that word income, or searching for dividend, finding that word dividend. The problem is you can find crappy stocks that have amazing dividends. This is ExxonMobil with an 11% dividend. Like I think that's a pretty bad idea. Even an AT&T, which has a 7% dividend, if you look at it, that looks horrible, right? So I responded to a YouTube comment of, I'm an older investor, I'm not working anymore. Bonds aren't really doing much anymore. Here's the yield on the 10-year. It's 96.96. That means you give the U.S. government $1 million for 10 years, you get $9,600 back a year. In 2000, it was $65,000. So the bond market's not necessarily the place. And if you look at the U.S. bond market, it's down from August, right? And it's looking like it's weakening. Here's the international bond market right here. That looks definitely stronger. Definitely anything above the blue horizontal line is a stability. So international bonds are definitely looking much stronger than U.S. domestic bonds as a category. So the takeaway, if we look at the market in the 11 sectors that make up the S&P 500, 4 are at new lifetime highs. Pretty big deal, okay? 3 are just digesting massive moves coming off the March low. That's also a sign of strength. And then we have 4, I'm putting utilities in there too because it's still below its February high. We have 4 that's still, some of them have gotten up off their feet, but they have to break above the February high, and we have 4 in that category. Now, in that category, one of them is the smallest sector, which is energy, which is just below 2% of the S&P. So it almost doesn't matter. But then the financial sector is in there, real estate is in there, and utilities. So the fact that the safe sectors are moving higher, the utility is moving higher, that's not a sign of danger. We have consumer staples, which is also a sign of stability, that's moving higher too. So we have the world moving higher, and the takeaway is to follow price charts and to let them give you the answer. Thanks, guys, for being here. Again, this is RC Peck with Fearless Wealth Training, and please go ahead and leave a comment. I answer them. I look at all of them. Please subscribe. And if you do have a question or a concern, or you are getting more and more curious about our training and how it does change people's lives at best, or people say absolutely worth the money at worst, you can just go ahead and email us at support@fearlesswealth.com. Thanks, guys, for being in my world, and I will see you on my next video. Okay, bye.